All right, let's move into our last segment here today. And Coach Greg, I'm interested to see what you got dialed up for us. I know we do this each and every Thursday. It's a little bit different in terms of character and nature than the other segments we have. You know, Trade Masters, we're looking at short-term analysis, short-term picks. Queen's Court's kind of the same thing. Jedi Options, usually we're digging into the options market like Tyler did yesterday. But buy one, hold one, dump one. We approach it from a fundamental perspective, and Coach Greg presents three different stock ideas, lays out the basic detail behind them. Then Tyler and I have to make a decision. Which one would we buy? Which one would we hold? And which one would we dump? You're up, Greg. What we got today?
All right. Well, in honor of Independence Day, I thought, what's more American than apple pie and beer? And as it turns out, it's property and casualty insurance. Once I went through the sectors, I looked at the financial sector. I was happy with the way that was setting up, and so I started looking through the holdings of the SPY there, and so I kind of looked through those and came across a few that I liked, and they happen to be in the insurance industry there. So I got a little bit of a curveball today that I brought in. I haven't let you guys know about it yet, but I will shortly. And got three good American companies here. They seem to have the market cornered on insurance, and so we'll break these down, and you guys can buy one, dump one, and hold one.
Sounds good.
All right. So we're starting out here. We're starting out with Travelers Insurance. Okay. So again, like I said, insurance is boring. It's only boring if you're having to pay for it. If you own the company, these things are like cash machines. They just seem to make money hand over fist. So Travelers, from a chart perspective there, what are we, about $151 stock there. Trying to break back up, kind of took it on the chin a couple of weeks ago, trying to get back to those moving averages there. So I don't mind the setup here. I think this is an opportunity here. Typically your insurance companies are decent dividend payers, and you'll kind of see that in the numbers there as well. So like I said, don't mind this here, trying to break through. If we can get through that old support level there, which is the new resistance, get above that 20, then really the only thing slowing you down is the 50, and there's a bit of room between those two lines. So I like that technically. From a fundamental standpoint, Travelers is looking like this. They pay about a 2.35% dividend. They've got 15 years of consecutive dividend increases. Started paying dividends in 1990. Their payout ratio is a paltry 31%. Their PE ratio is 14. Okay, so pretty decent if we look at the overall markets. That's not too terrible. From a fundamental standpoint, assets versus liabilities, they're sitting around 117 billion in assets, 88 billion in liabilities. They've got 4 years of consecutive net income increases, and they're sitting on around 7 billion in free cash flow. So fundamentally pretty solid. Their sales numbers this year, they're about 4.3% this year, and they're expecting a bump next year of around 6% going forward.
Okay.
All right. That's number one. All right. Now we're going to give you the Allstate discount. So we're going to go there. So this chart looks a little bit better, a little bit stronger. A little pop today. Got above those moving averages. The 50 already was above the 20. So showing some strength here. So from a chart perspective, this one looks pretty good. Pretty deep retracement, showing some fair bit of strength there. I like actually where this is at. I think there's some room to run back up to that 140 mark there. So don't mind this at all. From a longer term perspective, it looks pretty good as well. We kind of go out. It has its fits and starts, but really, you look from left to right, it's still moving in the right direction. So fundamentally looking at this one, $131 stock, 2.48%, 7 years of consecutive dividend increases, been paying dividends since 93, payout ratio of 24%, very, very low there, 12 PE ratio. Now their fundamental numbers, 126 billion versus 96 billion assets to liabilities. 3 years of consecutive net income increases. and about $5.5 billion in free cash flow. Sales numbers, a bit surprising here, negative 8.6% sales growth this year, and they're expecting just under 4% next year, 3.9%.
Okay.
All right. And finally, our friends at Progressive, the ones with the funny commercials. I guess they all have funny commercials, but
it's interesting on that. I was just thinking about that myself. Insurance companies, they got to fire themselves up a little bit. They get all the advertising spend and all that kind of stuff, Tyler, because it's hard to get people too excited about insurance. But all these guys spend money on their commercials quite a bit, don't they?
They do, yeah.
Sure.
Yeah, it is funny that you got the Geicos, the Allstate with what's disaster destruction, the guy's name on the Allstate commercials.
Oh, yeah. Mayhem.
That's right, Mayhem. Yeah, those are funny. I like them.
Yeah, that's good. All right, so Progressive, like I said, retracement here as well. This is on the weekly chart. On the daily chart, again, trying to break above that 50. If we get above there and then basically that 100 number there, like I said, I think we get a push back up. This one, obviously, a little bit more sideways chop than what we've seen from the other two. But still impressive rally here recently as far as kind of a V-shaped recovery there. So don't mind that, technically speaking. Now by the numbers, $98 stock, only a 0.41% dividend. Okay. Their years of consecutive dividend increases are 0. However, they've been paying dividends since 1965. Their PE ratio is 45, and their PE ratio is, I apologize. Their payout ratio is 45%. Their PE is 9. Okay.
Mm-hmm.
So assets versus liabilities, 64 billion in assets, 47 in liabilities. Their 4 years of consecutive net income increases, and they're sitting on about 7.6 billion in free cash flow. From sales numbers, growth numbers, they've actually got the best of the bunch. 13.6% this year and almost 10% next year are their expectations. So those are our 3 companies.
All right. So we got Travelers, we got Allstate, we got Progressive. And Tyler, one thing I'd like to do to kind of lay this out for me, if you can, I know that Greg always compiles some of the data in a little spreadsheet so we can present it. Can you recap that for us real quick and kind of, lay out the different components? I think I know where I'm leaning, by the way, but I might want to look at the data one more time.
Yeah, this is, I think I know where I'm leaning to, but let's see. All right, so Travelers, 151, 2.35. By the way, it seems like Travelers and Allstate are the 2 closest from a numbers perspective. PGR is kind of the outlier for me. These 2 look more like dividend stocks. PGR is kind of your dividend/growth stock hybrid here. But let's just run. Actually, let's do each column comparison here. So 2.35% dividend for Travelers, 2.48 for Allstate, and then 0.41% for Progressive. Travelers dividend increase are 15 years versus 7 years. These guys started around the same time in paying the dividends. Payout ratio is actually comparable for both of them. The E ratio is comparable for both of those guys. Sales growth. Any commentary on this one, Greg, Allstate, why it's negative today?
Yeah,
this year versus last year.
Yeah, I didn't have a chance to look into that, Ty. I'm not sure why. Like I said, that was a surprise to me to see a negative number. I used the same spot to get all this data. I didn't have a chance to look into why it's negative. But I am quite shocked at that. Really.
Is that the current quarter? Is that quarter year over year? Because last year we were right in the middle of the pandemic. People might have been canceling auto insurance.
Canceling insurance.
Yeah,
quite possibly. But you would have thought if that were the case, though, Travelers would have also been affected too, right? So
gotcha.
Yeah. So anyway, I could be an aberration, I guess, is the point. I don't know.
Could be an outlier.
Yeah. Sales growth next year 6 versus 4. Assets versus liabilities. I ran the percentage. They're almost identical. Free cash flow similar, and consecutive years of increasing net income similar. And then, so for me, Tim, so Progressive, tiny dividend yield, which for me, it's a preference thing, right? I mean, look, I don't care if you pay me any dividend if your stock's growing by leaps and bounds, right? You get paid two ways. You get paid through price increase and dividends.
Mm-hmm.
In the absence of one, I want the other, right? In the absence of a juicy dividend, I want growth. And as the chart of Progressive will attest, it's had a lot of growth. But curious enough, though, with as low as a dividend yield, the payout ratio being as high as it is, I find that a little interesting. I would have thought the payout ratio would be less, given that the dividend yield is so puny. I'm also impressed that the PE ratio is so low, given how much the stock price has gone up over the last 5 years. I think that's impressive. Higher growth rate, I think that's consistent with a lower dividend yield in terms of the appeal is the growth, not the dividend in this case. Assets versus liabilities and free cash flow, and these are all the same, pretty much among all three companies. So that's your recap, Tim. You want to go first, or you want me to go first?
Man, I'll go first. I got no problem with this. I think
go
I know
ahead.
exactly where I'm heading. Go back to the charts if you can, and let's talk. I actually have a different PE number on Allstate than you do, Greg, and different forward PE myself. But either way, they're very low PE ratios on all three of these compared to market, fundamentals right now in other industries, other areas. I like financials. I like highlighting this area. These are not short-term momentum plays, right? These are not the Teslas of the world, that kind of stuff. We're talking about insurance companies. Two of them pay pretty good, healthy dividends, one a little bit lower, but that's got that combo like Tyler talked about. I am starting with Allstate, and the chart alone was enough for me to want to call this a buy. After going through the numbers and also looking as to why the context of that one sales number was down, I've got quarter over quarter sales that are growing again. I've got next year forecasts that are looking good. Their EPS projections over the past 5 years, their sales numbers over the past 5 years. This is Allstate Insurance. We're talking about a very consistent company. All three of these guys make a lot of money, quite frankly, Greg. They're all about the same size. They're very good companies. Allstate has had a share buyback program in place now for the better part of a decade, and they've continued that. Looks like they are going to continue that moving forward as well. That always helps the stock price. 2.5% dividend on a, let's just call it single digit PE ratio at best. And maybe if you're looking at a TTM number differently, maybe it's 12 or so, but that's coming off of last year's pandemic. I think that could have affected some of their numbers. I see low valuation. I see a chart breaking out, relative strength against, if you look at Travelers, this is like the TRV chart, but TRV has to get the breakout, right? Allstate already caught the little breakout off of the pivot. So I'm a buy on Allstate. The other one is a little bit harder because I do like that Travelers does pay the higher dividend for a hold. So that's where my head is a little bit debating this one, Greg. I look at the fundamentals. I see a share buyback program. I see increasing sales numbers year over year over year over year. Even in 2020, by the way, they increased sales with everything going on in the economy there. It's a healthy company. It's Travelers Insurance. Go to Progressive, though. I just do not trust the price action here. I'm going to hold Travelers. I'm going to dump Progressive, bypass the low dividend and the growth opportunity here, try to find growth somewhere else. I'm holding Travelers for the dividend. I'm buying Allstate because of the technical strength, and I'm dumping Progressive. That's my choice, Ty.
All right. I am in agreement on the buy. I think Allstate's just fantastic on the daily chart. I like the trending characteristics. I like the weekly chart, certainly. I know it's been messy, but over time, this thing's been going up. The low PE ratio helps as well. Yeah, I think it's hard, and it's got the highest dividend yield, right? So cleanest looking entry in the immediate term, highest dividend yield, really good PE ratio, nice long-term chart, and Dennis Haysbert. Dennis Haysbert is he's the guy on all the Allstate commercials, not the Mayhem guy. He's the African-American guy.
Oh,
right?
Yeah. He was the president in 24 back in the day.
He was the president in 24.
Deep voice. Yeah.
Yes. And he played in The Unit on CBS, which was an Army Man show. And I loved The Unit. So going with my boy, Dennis and Allstate for the buy. I am disagreeing on the other two. I think Travelers is too similar to Allstate. I want a little diversification. I'd rather dump Travelers because I bought Allstate and they're too similar. I'm going to buy Progressive because I want the growth opportunity. I want a barbell approach with my insurance exposure. I want the consistent Allstate dividend player, and then I want Progressive to give me some growth. So I will hold Progressive. I will buy Allstate, which means I like Allstate more than Progressive. And I will sell Travelers just because I got to sell somebody.
Fair enough. Greg, it's always the fun part for me.
Yeah, and I'll tell you why you're both wrong. But anyway, so this little exercise today was a look beyond the numbers for me. So when I compiled these numbers, I looked at all of them. Travelers and Allstate, it's a coin flip, really. They're very similar companies. So having said that, you got to go with the better chart, and no question, Allstate's the better chart. For me, that's actually going to be my hold. I would hold Allstate because I do like the chart. I do like the higher dividend. I am going to give them a pass on that negative 8.6. Like you said, it could be pandemic related, could be an anomaly, a one-off. So I'll give them a pass on that. They've got many years of consecutive dividend increases. Like I said, highest dividend, and you know how I feel about dividends. Decent PE ratio, regardless of where you get it. Lots of cash, lots of free cash flow. All of that stuff's very similar with these three. Travelers is getting dumped just because it's very similar to Allstate. Like I said, they're both apples as far as I'm concerned. They're two of the same. A little bit different growth numbers, but I'm buying PGR, but I'm buying it for a very different reason than Tyler. Tyler wants the growth out of it, and I think that's in that realm of getting that. Obviously, you can see their numbers there. Their numbers are pretty impressive. 13.6 this year, 9%, almost 10% next year. That's not why I'm buying them. What I did here was when I saw a dividend of 0.41 with a company that was very similar to these other two in that same space, I started looking beyond the numbers. Can you go to dividendinvestor.com for me, Tyler?
Yeah.
And just for comparison's sake, throw in Allstate right now, ALL. You might get a pop-up there first. Just close that and then there you go. If you throw in Allstate, just hit enter for me and then scroll down. I just want to see the bar graph, okay? So if you look at the bar graph on this website here, it kind of shows you the consecutive dividend increases. You can see when they ran into trouble after the financial crisis, all that kind of stuff, but they're kind of getting back on track now. Now, if you could throw in Progressive for me, up at the top there. This is why I'm buying Progressive. So that 0.41% dividend doesn't take into account all the rest of this. So Progressive happens to be one of these companies that builds their dividend according to how well they do. And as you can see, last year they paid $4.80 in a dividend. The year before that, $2.65. So even though their dividends are very up and down, they've given back almost $20 since 2007 to anybody who owned this stock. And if you owned it back in 2007, that's a fair chunk of change. And so this is one of those companies that when they do well, you do well kind of stuff. And for that reason, that's why I'm buying Progressive. Not only do you have the growth that Tyler was looking for, but you've actually got the potential to reap the rewards on the dividends as well. This is where you have to look at, just go a little bit deeper in the numbers, because really that 0.41% there, if you just looked at that, you'd be like, as a dividend investor, that's not really great. 0 years of consecutive dividend increases, that's not great. And then you start looking at the numbers. Heck, last year you got $5 in dividends alone. So
interesting.
I have a question on that.
Sure.
So this 10-cent quarterly dividend is not reflected. That $5 is not reflected in these dividends.
No.
So what is it? They have a base dividend and then they do a special or something each year depending on how much they make, or what?
Yeah. So when I was a financial advisor back in the day, there were certain companies that paid dividends according to their business, their revenue and earnings, right? So I believe that's how Progressive runs theirs. according to that chart, right? And again, I'm just using, I haven't verified that data, but according to that chart.
So it was a ruse. So the 0.41 didn't tell the whole story.
Well,
I
but
see.
the whole point of this, Tyler, actually is, and that's why I said that, is sometimes you got to look beyond the numbers, right?
Sure.
Because, you know, there's a bunch of really good dividend payers that I think are fantastic. But if you go in, you'll see a bunch of, you know, maybe you only see 5 or 6 years of dividend increases. But then you go look at that bar graph and you realize that one year, one of the dividends got kicked into the next year or held back into the previous year. And had that lined up the way it was supposed to, it still they would have had 20 years of consecutive increases. So
on a $100 stock, I mean, that's like a 5% dividend yield, right? I mean, this is like 10x higher than what initially was.
Exactly. But that's what I'm saying. You got to kind of, sometimes when you're doing your fundamental analysis, you got to look a little bit deeper than the numbers. And that's really what Progressive, because really, had you just thrown me the numbers here, I would have said, no, I'm not really interested in Progressive as a dividend investor. But once you look a little bit deeper, hey, you want to give me $5 every, you know, even if they did it every 5 to 10 years, I'd be happy with that too, right? That's going to get my break-even price down pretty quickly.
Well, let's not bury the lead here. You made the same choice as me to a certain extent, not Tim. So that's really what matters.
I'm sticking by it. We got an insurance company that's run 10% into a breakout there. I still wouldn't buy it yet. I like the Allstate chart, and I think Travelers is still a hold. So I'm sticking by my call, but I appreciate the context there, Greg. As always, a lot of fun. That's the fun part for me, is when we get to hear your thoughts after we get done.